Honestly, I have no idea what you're talking about, okay? But one thing for sure is that I want to talk to you about business loan with no personal guarantee and fast approval, the top 6 metrics that lenders always check before approving you. Don't you go anywhere. You're going to love today's conversation, I guarantee it.
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flower that's stinging from the beat, but the rhythm's getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in a million, one in a million.
Welcome back, folks, to another edition of the Awesome Suri Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you're to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's discussion, I want to talk to you about business loan with no personal guarantee and fast approval. What are the top 6 metrics, the top 6 elements that lenders always check before approving you? Okay, let's start with, I want to give you a few pro tips. Very important. The pro tips are really important. First, let's talk about your bank statements. Okay, this is really important. The funny thing is, people walk around and just say they have a business and they want to get a loan with no PG, but they have no bank statements, or they even have they have no bank account at all. Where did that come from, folks? Let's talk about that. Hey, Paul, I'm talking to you. See, that's important. You're just sitting around and saying, oh, I want a business loan with no PG. But hey, listen, do you have a bank statement? Do you have a bank account? You got to have a bank account, okay? The lender wants to see bank statements from you. They want to see bank statements for the last 3 months, okay? It's really important because, hey, listen, if you don't want a no personal guarantee loan and you want a fast approval, you need to show the lender something. They want to see your cash inflows and cash outflows. This is really important, okay? And when we talk about bank statements, you want to pay attention to a few things. Do you have non-sufficient fund events? In other words, you have overdraft. That's one thing the lender is going to pay attention to, all right? So Paul, Michelle, if you listen to me right now, I'm talking to you. I want you to really pay attention to that and make sure you have a clean bank account, all right? We just have to stop having negative balances, because the lender is going to look at your bank statements and pay attention to the negative balances you have as well. Okay, I'm talking about NSF. I'm talking about negative balances. Okay, so anytime you have this sort of events, the lenders will pay attention and see, hey, is this applicant having a problem, managing the liquidity? Because if I'm going to actually give them a loan, I don't want the sorry ass to say, hey, listen, I can't pay you because I'm having problems. The lender is going to pay attention to your average balance. Okay, so when they look at your bank account, they'll look at your average balance, and they'll also look at your monthly deposits. So long story short, they will pay attention to your cash inflows and cash outflows to see your liquidity situation. This is really important, okay? Now, you want no personal guarantee, that's fine. You want EIN only, that's fine. But make sure that you have the cash to pay the loan back. The second thing you want to show is your financials. Actually, lenders pay attention to your financials a lot. Okay, I'm telling you, like 100%. When we talk about financials, we are speaking about financial statements. Okay, now speaking of financial statements, did you hear that they pay attention to all 4 financial statements? Oh yeah, because everybody walk around telling people, hey, listen, you just need to provide your income statement, your statement of cash flows, and your balance sheet. But hey, what about the 4th one? There is a 4th financial statement that is called the statement of owner's equity. This is really important, and people are just like, oh yeah, you don't want to care about that because it doesn't matter anyway. No way, Jose. You need to care about that, okay? And really, the funny thing is that in addition to those 4 financial statements, there is something called disclosures to the financial statements. In other words, you need to add to the financial statements what kind of assumptions you actually made to project data or even to calculate the data in the financial statements. Okay, I'm just spilling all the beans today. Yeah, I'm dropping those gems today because I'm just kind of tired of people actually doing things doing things in an incomplete manner. So if you want to comply with U.S. GAAP, U.S. generally acceptable accounting principles, you really want to have financial statements prepared in a certain way. And you don't have to do this. You can outsource the whole thing. I'm not asking you to sit around and just try to pretend you are an accountant. You don't have to be an accountant, okay? So when we talk about your financials, the lender is going to look at your annual revenue, okay? So this is one of the most important eligibility factors for loans for business loans with no personal guarantee and fast approval, okay? The lender is going to look at your profitability, your income statements. What's the bottom line? Your net income, okay? So after annual revenue, we're talking about profitability. The lender will pay attention to your current debt obligation, your debt obligations, so this kind of information, you find that on the balance sheet. Okay, so the balance sheet has two sections, actually three. You have the assets, you have the liabilities, and you have the owner's equity. Okay, so the thing is that your current debt obligations will be on the liability section of the balance sheet. The lender also want to pay attention to your cash flows. So the cash flows, you'll find this in the statement of cash flows. Okay, you have cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. Those three parts are really important. Okay, so let me give you an approach here. Okay, the thing is that when you want to show financials to the lender, make sure that you have either an accountant, a CPA, or somebody actually prepare it for you. You want to review it yourself to make sure that the numbers are realistic. Okay, the whole thing is not to razzle dazzle the lender and give the lender some kind of funny data and say, hey, listen, look at me here. I'm banking. I'm just making money here. But the truth is, you're not. Okay, so be realistic. The third thing that the lenders always check before approving you is projections. I'm talking about projected data. See, the thing here is that before I spoke about financial statements, right? So those are based on actual data, okay? Things that happen now. We are speaking about projections. So we are going to extrapolate. We are going to anticipate. We are going to estimate, okay? This is really important. Now, there is one thing that bugs the crap out of me. Oh yeah, always bugs the crap out of me. The thing is that people walk around and say, I don't need projections. I don't need financial projections. Because the thing here is that I'm new, I'm a startup, and I don't have data to project. Wrong, boss. This is wrong. Whether you are an established business or you are a startup, you can project. See, a projection is a mental exercise. So you're basically sitting around and say, hey, listen, based on the revenue that I project, based on my expenses, based on the trends in the industry, I believe that I will have revenue of so and so at the end of the first year, second year, and third year. You got to do that, boss. You got to do that. Okay. So when we talk about projected financial statements, you are talking about sales revenue, cost of goods sold, gross profit, sales, general and administrative expenses, depreciation, interest cost, tax expenses. Okay. You also need to talk about your assets, liabilities, equity. So it is an exercise in telling the lender that you believe that your company will reach a certain point. 1 year from now, 2 years from now, 3 years from now, the lender want to see that you really believe in your business. Okay, that's really important. So don't you just walk around and just give very teeny weeny yellow polka dot bikini numbers, tiny numbers, small numbers. No, be ambitious, boss. I want to see the ambitious part of you. Okay. Now you have to understand there are differences between projected, estimated, and provision financial statements. So we have projected financial statements. That's basically based on the projection for which the period is not started. Okay, that's the future. And for estimated, this is prepared for future data. Okay, future data, and basically it has started but not completed. Okay, and the third one is provision financial statements. Those are unaudited financial statements. Okay, and they are prepared on the basis of actual or past data for the period which is already completed. So this is really important. I just want to clarify the subtleties here. So big decision time, boss. Do you currently have projections in your business? Have you prepared projected data? Do you have it? If not, you need to start taking care of that now. Very important. I want to talk to you about the business plan. Oh yeah. See, the thing is that the lender will always pay attention to your business plan, and the reasoning is analogous to what I said earlier. It is similar. In other words, whether you are a startup or you are an established business, guess what? You need a business plan, okay? And the funny thing is, people just walk around saying, "Hey, listen, yeah, I'm just a startup and I haven't made any revenue yet. I'm just starting. Like I started 3 months ago, 6 months ago. But hey, the business plan that I'm talking about, hey, the business plan I'm talking about, it's something you should have done way before starting your business. Oh yeah, okay? Because if you really have been following our show for a while, you understand that business plans play a quintessential role. Okay, it is a very important role. Now, I don't care whether you are selling to rich clients or rich customers or poverty-stricken customers. I really don't care. The thing is that customers are customers. They are going to generate revenue for your business, and you need to write a business plan based on that. And we're talking about making sure that your business plan has unique value propositions, marketing strategies, a leadership team, talked about a leadership team, revenue and profit models. Okay. Everything I'm telling you, you don't have to do it yourself. I always say here, listen, not everybody is talented in everything. Okay. But if you have no expertise, if you have no knack for writing business literature, you want to outsource the whole thing. And it's not that really that expensive. Okay. And also you want to make sure that your business plan is presented in concise yet detailed terms that clearly explains the amount of funding you need and why it is required. That's called use of loan proceeds. There's a section on the business plan that says use of loan proceeds, folks. Okay. So, boss, I'm talking to you. Let me give you a few pro tips. So, first pro tip. What you want to do here is you want to outsource the whole thing. Now, you can use software, business plan software, such as Enloop, such as Live Plan, such as Base Plan. And you can actually, or Idea Buddy or Growth Think. Okay. You can use those to actually write your own business plan. They make it very easy. Okay. Very, very easy. You don't need any prior experience in business planning to write that, to write your plan. You can actually, so if you don't want to have the DIY route, you just want to outsource it to somebody on a Fiverr or Upwork or TopTal or freelancer.com that'll take care of you. Okay. Or you can just hire somebody locally. Okay. A business plan writer locally to kind of help you out. Okay. Long story short, I want you to make sure, please do not go on the internet and download a very cheap ass business plan template and try to customize the plan to suit your needs. That's just very childish and it's amateur. We don't want that. The lender will pay attention to loan proceeds. I was talking to you earlier about that. So see, you have to tell the lender why you need the cash in the first place. It doesn't matter whether you are looking for, let's say you have a new LLC, why are you looking for a business loan with no personal guarantee? In other words, you want to have an EIN only business loan. And the thing is, the lender wants to say, hey, listen, why do you need the cash? Why do you need the money anyway? See, that's important because the lender wants to have a contextual understanding. See, the thing is, cause I'm talking to you now, mother, father, I'm talking to you, daughter, son, I'm talking to you. Okay. There is something very important here. When you know the background of things, everything comes together. This is important. I want you to let that sink in. When you know the background of things, everything comes together, and that's what you want. That's what the lender wants to see. The lender wants to understand the background of your business and why you need the money in the first place. Okay. Now, there are common reasons why you want to get a loan for your new LLC with no personal guarantee. You want to, you can get the cash for emergency business decisions. In other words, you just started and already you're having problems. You just need to do this, need to do that, blah 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 blah. You need cash. That's the bottom line. Okay. No, actually, no. This is, you just need cash, or you need cash for working capital. Okay, you need cash for cash flows, just for cash flows. In other words, you need cash just to be able to pay suppliers, just to be able to pay your staff, to just be able to pay inventory and all that kind of stuff. Okay, and you can also get cash for business expansion loan, for business expansion. In other words, you just a new LLC, but already you've seen opportunities in the industry, and you're trying to seize on that opportunity. You're trying to capitalize on it, right? So you just want to have whatever cash you can grab to make sure that you are able to seize that opportunity. That's totally fine. So when we talk about use of loan proceeds, you can also use the cash for advertising, marketing, and customer acquisition. Those are legit reasons. You can use the cash for equipment loans or leases. Okay. So the bottom line here is that when we talk about money, you need to clarify what you're going to use the money for. See, the thing is that the lender is going to pay attention to use of loan proceeds and making sure that the goal of the loan, in other words, the reason why you need the loan in the first place, is in sync with your new LLC business. In other words, that loan is going to help you, it's going to provide you the funds you need to generate more revenue. Very important. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I am still having a conversation with you about new LLC business loan, no personal guarantee, and we want fast approval. So the lender wants to pay attention to your repayment strategy. Oh yeah, this is something you should have thought about. See, the lender is thinking about, are you generating enough cash to pay them back? Because the last thing they want is just to have to actually give you the money, and then have to and then when it comes time to repayment, you have to start playing games on them, and then they have to allocate more resources to hire collection agencies to track your sorry and broke ass down. They don't want that. Okay, nobody wants that. So it's really important to have a repayment strategy. Okay, and let me tell you what would happen if you don't have a repayment strategy. You're gonna be walking around and trying to find the cash to repay the loan. No plan, you are risking everything. So I want you to see right now to have a plan. So when we talk about having a plan, we are talking about having a short-term plan and a mid-term repayment plan. In other words, you want to allocate enough cash. You want to put enough cash aside so you can take care of the loan. Okay, you have to repay them. And it's really important. And that has to do with a lot of things. Okay, your plan will depend on the interest and fees, on the open balance, the loan limits, how the payments are structured. This is really important. What's the overall cost of funding? Okay, so those are really important things you need to pay attention to. Okay, and the whole thing is that, again, I insist on the plan, having a plan. Okay, so there are also some potential fees that you have to consider. So if you have a loan, and depending on the loan that you have, you might have to think about your factor rate, origination fee, closing cost, underwriting fee, application fee, processing fee, late payment fee, prepayment fee. You have a constellation of fees that the lender might want to slap on your ass just to sort of give you the loan, the business loan for your new LLC without personal guarantee. But you got to be aware of those fees. Okay, so here is your pick. The pick is, your selection should be a lender that understands your industry, a lender who has affordable rates, a lender who can give you the cash real quick, because you don't want to waste your time on back and forth with a lender who was not going to finance you in the first place. No time wasted here. You want to go with a lender who is really fast, who is asking questions, who is getting the answers and moving along. That's what we want. We want some movement here. This is really important. Okay, so repayment is a quintessential element that lenders pay attention to. Before I close today's conversation, I just want to give you the pros and cons. Okay, so I talked about the top 6 elements that lenders pay attention to. Those are the top 6. Now I want to give you a few pros and cons so that you have a clear idea of, when we talk about business loans for new LLC and a no personal guarantee and fast approval, you have to understand what really matters here. So the pros: you have access to working capital, which is quintessential if you're a new business LLC. If you're a new LLC business, you need cash. Okay. When I'm talking about working capital, I'm talking about everyday cash for nearly everything. You want to pay your vendors, you want to pay your suppliers, you want to pay your staff, you want to take care of inventory. That's everyday cash that you need. Okay. And speaking of everyday cash, did you hear that the lender will provide you with working capital if you see this in the business plan? Oh yeah, this is why you want to document everything in the section called use of loan proceeds in the business plan. So another advantage is you have credit, okay? And there is no minimum credit score for this kind of loan. And you have fast processing times, okay? You have a reduced documentation. We have a low doc or no doc. And personal guarantees are not required for some products. It really depends on the product, okay? So those are the pros of this new LLC business loan, no personal guarantee. What about the cons? Well, interest rates will be higher than that of traditional business loans. Fees may cost more than conventional business loans. Yeah, that's what it is. Terms will be shorter in the duration of time to repay. Okay. Sometimes they want you to actually pay within a year or within 2 years because they don't know if your ass is going to be around 5 years from now. Okay. And those loans may not have the same flexibility as other business loans can. And business loan amounts and access to the amount of capital may be reduced. Okay. So it's important to really pay attention to that. And there are a lot of players that provide business loans for new LLC with no personal guarantee and fast approval. You have marketplace business loan providers. Okay, those are really important. You are talking about the Lendio of the world. Okay, Lendio. You have Fundbox, for example. You have National Business Capital (NBC). Okay, and you have business loan brokers. For example, you have Fundera. So those are Fundera is a business loan broker. You actually have online business lenders. I'm talking about fintech companies. You have Blue Vine, okay. You have On Deck, yeah. It's important to have. You have Cabbage, okay. Those are online business lenders. You also have invoice factoring companies. You have hard money private business lenders. So you have a constellation of players here. So your decision should be what? You want to decide on a lender that actually understands your industry. I said this before, who offers transparency in terms of pricing. So you know exactly what you have to pay. Okay. Who is very fast also, and who requires, I would say, fewer documents for approval. Thank you so much for your attention, folks. I really appreciate it. I was talking to you today about new LLC business loan with no personal guarantee and fast approval. Okay, here are the top 6 metrics the lenders always check before approving you. So we have bank statements, your financials, projections, okay, business plan, loan proceeds, and repayment. And then I talked about the pros and cons, okay. Thank you so much for your attention. I really appreciate it. I'll see you next time. But until then, remember, stay marvelous.